Dennis Geiger is a UBS analyst and recently reiterated his buy rating for McDonald's, saying it is well positioned and defensive. Let's start with the China piece of this. So what do you think we're going to be hearing?
Yeah, so as it relates to China for McDonald's, not a huge piece of the business, right? Less than 5% of overall profitability. So I would think China's going to be less of a focus for McDonald's. It'll be more the US and Europe, where we think results will be strong. As it relates to Starbucks, we would expect China recovery, certainly after some of the developments this year, maybe not a linear recovery, but we should see a good recovery through the year. Right now, there's a reopen theme very much that's going on with China. It's helping shares, as is the momentum in the US. So we would expect some pretty positive commentary from Starbucks, given China represents about a low double-digit percentage of overall profitability for the company.
How are you feeling about Starbucks more broadly? I mean, it has been on quite a run. Call it the Howard Schultz run.
Yeah, so again, we think that the run is probably a factor of two things, right? One is the China piece and just that reopen theme, investors looking for exposure there. Starbucks, one of the best ways to get that exposure within restaurants. And the other would be the US momentum. A lot of momentum in the US. We expect that there'll be some modest upside to the consensus number for the US comp. And we think you put those two things together and there is kind of the run. From here, valuation to us looks a little bit more full as it relates to Starbucks here. Plus, we've got some concerns as it relates to the U.S. macro. Will this momentum be maintained? So we prefer McDonald's here relative to Starbucks, actually.
And then where do you put Yum in that mix?
So we
They're
like Yum
benefiting from the China reopen too, right?
Yeah, absolutely. So about 14% or so, let's say, of pre-COVID profitability came from China for Yum Global. We like that one very much. Like McDonald's, we think this is a defensive name where you can also play some offense. We think there's sort of a resiliency as a trade down benefit in a tough consumer spending environment. Well, at the same time, global unit growth will be at least 5% for Yum. We think the brands are well positioned from a same-store sales perspective. So we think Yum and McDonald's, if the group is red, we think they'll be flat to up in a tough tape.
Dennis, I want to throw out a sort of geopolitical, maybe grenade into this conversation. We were talking TikTok in the last hour, and when it comes to China. And I wonder what kind of risk you think exists both in reality and in the stock of the Starbuckses, the McDonald's, the Yums, of this skirmish, if not something worse, between the United States and China. What could happen, both in the context of what the Chinese could ultimately do to a company like Starbucks or McDonald's, but frankly, what Congress could do. I mean, we always talk about it as if the Chinese are going to do something to the American companies. I wonder whether there could ever be a sort of scarlet letter on U.S. companies doing business in China, and somehow Congress or others in Washington say, stop doing that.
So I guess to that point, Russia would obviously be case in point for what a downside scenario would be. We see McDonald's exiting Russia, obviously, over the last several months. We see Starbucks doing the same thing. So that's kind of your tail risk. I would say right now, again, all the focus from a China perspective is on this reopen trade, what the recovery from a sales perspective looks like. Unit development or restaurant development has remained really strong for all the multinationals doing business in China, even over the last couple of years. So we think right now that's kind of the theme and the focus from an investor standpoint, recognizing there certainly is some tail risk that exists out there.
But how do you estimate that tail risk? Is that tail risk in the stock? And do you sit around and say, man, do I hope that Washington actually doesn't do anything to a TikTok? Because do we get into some kind of, back and forth if in fact they do?
Yeah, so I would say at this point, there's probably, little risk from the geopolitical risk priced into the stock. If we just look back over the last many years, you've seen some periods where sort of anti-Western, sentiment maybe has been a focus for the market in general. You really haven't seen any impact on the Western brands in China from a sales perspective. So again, I think that risk is hard to handicap. I would say right now, there's probably not a whole lot of that in the stock and in these restaurant stocks.
Dennis, domestically, we could remember when the group would trade pretty tightly to kind of wage growth expectations and things like that. Where does that sit right now, as a lot of that has worked its way through? Presumably a lot of these companies have tried to take as much pricing as they can.
Yeah, so right now, wages obviously up significantly, for the sector, for the market, obviously more broadly. What we've seen really is certainly pressure on margins in 2022, both from food cost pressure as well as wage pressure. We think you're going to see a bit of a step down in inflation percent increase on wages and commodities in 2023. All that said, we prefer the names we're talking about, the McDonald's, the Yum brands that are insulated, to some extent as heavily franchised businesses from some of this cost pressure. Obviously, we're very focused on the franchisees within these brands, sort of maintaining good profitability, looking to continue to grow. But we would say, to date, the names have done a pretty good job seeing some margin pressure, taking a lot of price, high single-digit price or so to manage some of these costs. Traffic's a bit negative, but for the most part, same-store sales trends have been resilient throughout 2022, despite some of the pressures that are out there for the restaurant group.
Dennis, we're going to leave the conversation there. We appreciate it very, very much. It's a fascinating situation. We're going to be keeping our eyes on these earnings reports coming our way throughout the week. Thanks.
Thanks, guys.
Still to come, full market coverage for the trading week ahead. We'll talk to Savita Subramanian on what she's seeing as we continue a busy earnings season. And later, Mohamed El-Arian tells us what to expect from Wednesday's Fed decision and where he sees rates going from here. Stay tuned. You're watching Squawk Box, and this is CNBC.